back Mike Novogratz's crypto firm, moving over from the Toronto Stock Exchange following a years-long battle with U.S. regulators. It is the latest regulatory win for a crypto industry, boosted by a big run in Bitcoin, crossing above 104,000, I should say, and back within a whisper of all-time highs. Our next guests say new highs could be close at hand as more companies take a page out of the MicroStrategy playbook and pile Bitcoin onto their balance sheets.
Bitcoin's climb past $100,000 has done more than break records. It's awakened a new era in global finance. This milestone, once dismissed as improbable, is now pulling in investors and corporations like never before. Wall Street, tech giants, and even once skeptical regulators are taking notice. With companies emulating MicroStrategy's approach and listing Bitcoin on their balance sheets, we're witnessing a turning point. This isn't just about price action anymore. It's about institutional commitment to a new monetary standard.
Corey, I'll start it off with you. Part of your thesis at Swan is that Bitcoin is maturing. It's maturing from a speculative asset to a full hedge. Is that a good thing or a bad thing? Because I would think part of Bitcoin's allure in the past has been the volatility, the big gains that it can have. Does this smooth out the volatility? There's a good side, obviously, and a bad side, too.
Yeah, it's inevitable that something that is going to be worth as much as we all believe that it will be in the future. It's not going to be a smooth ride on the way up, but as it gets larger, as the price and the market cap go up, by definition, now you're going off of a larger number, and so you're going to see that volatility smooth out over time. It's still going to be a very bumpy ride from here on the way up for the next few decades, though.
Bitcoin is entering a new phase of its life cycle, maturity. The asset once defined by volatility and speculative fervor is now being recognized as a macroeconomic hedge. That doesn't mean the roller coaster is over. It just means the track is getting longer, the ups and downs less erratic, and the destination clearer. The larger Bitcoin becomes, the more it stabilizes, though anyone expecting a completely smooth ride will still need to buckle up for the long haul.
You can, and it just lets you know exactly how early we are to this cycle. Shareholders have woken up and they really want their executives to start focusing not only on the income statement, but on deploying the balance sheet in the right way to generate value for shareholders. So I think what you're starting to see here in these early days is that the companies are jumping on board. And I think they're going to be a major driver for us pushing forward because they've never had a better risk-adjusted time to get involved.
The corporate mindset is shifting. Where executives once focused on quarterly profits and safe reserves, they're now being pushed to think like investors. Shareholders aren't just demanding growth, they're demanding innovation. Bitcoin offers a high-conviction, high-reward vehicle for balance sheet optimization. And what's more revealing is how early we still are. If only a handful of companies have acted so far, imagine the wave still to come when others follow suit.
Yeah, so there are a few things at play here. One is that Bitcoin is regulated as a commodity, so it is on that very short list of potential options. It's also, maybe alongside gold, one of the only commodities that tends to go up and keep pace with monetary inflation, as gold has kind of historically, and Bitcoin obviously has far outpaced that throughout its history. So I think it's that, and then the reason that I think these companies that are going down this path, like MicroStrategy, Metaplanet, Semler, Strive, et cetera, I think they are the ones that are led by people that truly believe that Bitcoin has a lot more upside than any other asset out there.
The decision to adopt Bitcoin isn't being made randomly or emotionally. It's rooted in legal, historical, and performance-based reasoning. As a regulated commodity, Bitcoin checks the compliance box. As a scarce asset, it meets the inflation hedge criteria. But the biggest reason for its appeal? It continues to dramatically outperform traditional inflation hedges like gold. Leaders making this shift aren't just betting on Bitcoin, they're rejecting the limitations of the old system.
And then as far as kind of the other side of your question, which is, essentially the perfect target here, and Ben can probably elaborate a little bit, is something that used to be more of a private equity target. It's a company that maybe actually has pretty good cash flows, but the market it is not loving it, is giving it a low multiple because it doesn't trust the company to reinvest those cash flows in the business, and that's how you end up with dividends and share buybacks. But if you put it into Bitcoin, now all of a sudden cash is king. The cash that you're making actually rides that Bitcoin CAGR that, again, historically has been fantastic, and we expect it to be that way for decades to come.
This new strategy is particularly powerful for companies that have hit a wall with traditional investment approaches. Rejected by Wall Street but flush with cash, these firms now see Bitcoin as a transformational asset. Instead of weak returns from buybacks or dividends, cash can be converted into rocket fuel, tied to Bitcoin's long-term trajectory. For many of these businesses, that's not just reinvestment, it's redemption.
I think when people have been looking at all the issues with tariffs and they've started to really wake up to the problems that face even the United States with their reserve currency, with monetary debasement, inflation, they're looking for ways to opt out of that system. And you saw that recently with all the tariff action when people were really expecting the risk assets to take a dive. And Bitcoin showed a lot of strength during that period. So I do think you're starting to see that rotation out of US dollars and into hard assets where they believe that they're opting out of that system and taking a stance.
What we're witnessing isn't just a bull market, it's a silent rebellion. Investors are no longer satisfied with fiat currency that can be devalued at will. They're opting out of the traditional system entirely. Bitcoin, in this context, becomes more than a hedge. It becomes a protest. A silent but powerful financial vote against inflation, debasement, and centralized control. Now that Bitcoin has crossed $100,000, the game is no longer hypothetical. This is no longer a question of if, it's a matter of when and how far. Companies are rewriting financial playbooks, investors are rebalancing portfolios toward harder assets, and the narrative has shifted from fringe to future. Bitcoin is being legitimized not only by price action, but by policy shifts, strategic deployments, and macroeconomic pressures pushing adoption forward. In the past, Bitcoin was driven by tech idealists and libertarians. Today, it's driven by CFOs, hedge funds, and multinational CEOs. We're not just watching a chart move, we're watching monetary history being rewritten in real time. So what do you think happens next? Is Bitcoin about to become the new global reserve asset? Or is this just another chapter in a much longer financial revolution? Let us know in the comments below.